What's good? What's good? What's good? Welcome to another episode of Cheef and Chart. It's your man Don Bucks. It's brought to you by Rap and Dough, the home of money conversations. So, this particular series, we talk about options trading and investing, but in particularly the charts. You feel me? While we cheap on the finest, of course. This is episode Green Gasoline. Momentum, divergence, follow through. So if options trading and investing is your thing, make sure you hit the like, subscribe, and notification bell so you can get this game when I go live. So if y'all was here yesterday, y'all know what we was talking about. We seen what the SPY was doing. But today was a dope day. Before we get into that, today was a dope day. But I must say, this options thing gets easier if you're struggling, because I know people are struggling. And the reason why people may be struggling is because you have to accept that there is going to be a learning curve. Everything looks easy to the person that's been doing it for a while. Like I always equate it to when I was in the barber industry full time, right? We made it look easy. I made it look easy because I was doing it since I was 15. So if somebody coming in and they like, oh man, you look cool doing that. Well, that looks like something I would like to do. I can do that. Yeah, you will be able to do it after you put in 15. Well, it'll look this easy once you put in the repetitions that person has put in. And I've seen a lot of people come into the haircut industry and quit under pressure because you're standing in front of people, you know what I'm saying? And people are expecting to get in the chair within the next half an hour, to an hour. You're sitting there cutting the head for, 2 hours worth of heads or two haircuts worth of time on one head. That pressure of not being able to perform like everybody else could break some people. And I see that with options trading. People come in and think they can do what I make look easy or what my mentor, Todd Capital, makes look easy off the bat. Like you can't be 18 years old unless you live 18 years. I mean, I'm laughing, but I'm serious, right? So don't be afraid to go through but you have to accept the fact that you're not going to be perfect off the bat. You're going to know some things, and I just need you to accept the fact that it's a learning curve. I want to shorten it for you, but you have to be practicing, y'all. You have to be practicing. So with that being said, let's get into these charts because y'all know what's going on. Y'all know what happened. Y'all know what happened. Let me share my screen. So the SPY was doing this thing the past couple of days. And I'm about to show you what I mean. So look at this. So yesterday, make the screen bigger. This is the bar we was looking at. Y'all following this circle cursor thingy here? This bar right here, this big green bar was what we was looking at yesterday on Cheef and Chart. So actually yesterday was Sunday. Actually, Sunday was what the chart say Sunday. So if you was tapped in yesterday on what the chart say Sunday, this was the bar from Friday. So let me move my head out of the way. And let's focus now down here on the MACD. Sorry, y'all. Let's look down here on the MACD, down here. So we knew on this red bar here, when it dropped and it hit this level, because we're on the daily, right? We got to start at the daily because we're trading short term. All time frames matter though, right? Y'all know from previous episodes, y'all know what I'm talking about. So on this red bar here, we've seen a new high on the MACD. And that was from, I think that was created from this big debacle we had last week. And once again, if y'all was tapped in, y'all know what I'm talking about. But that new high began back then. So we were looking for weakness. We look for momentum divergences. That is my bread and butter as of right now. And that is when you see a new high in the MACD, but weakness in a bar. So this was Thursday. It went up and it came down. So, when price action stuff comes back down, right? So we're looking for a momentum divergence, a new high in the MACD with weakness in a bar. So we waited until it stopped. How do you know when it's going to stop? I'm glad you asked. I said this in previous episodes, but we're talking about it, so let's talk about it. You can't see everything that's going on in a daily bar or a weekly bar or monthly bar as far as what's going on intraday during the day. So during the day, this whole one bar signifies 6 hours of trading. So being that it's green, if you don't know any better, you think it was all buying going on. No. The stock market consists of buying and selling, but you can't see it all in that one bar. So you have to drop down to a trading time frame. Now that one bar is 4 bars. So 1, 2, 3, 4 represents that one bar. So let me make this bigger. One, two, three, 4. This is today. Instead of looking at that one bar in the daily, now we can see the integrity of that one bar, what was going on. So we see, keep it bigger. What we said yesterday that, so this was today, so that means 1, 2, 3, 4, this was today, so 1, 2, 3, 4. This was yesterday. These 4, 1, 2, 3, these 3 green and this little red, that was yesterday. So this was the weakness that we were looking for. Like I said, what was going to happen? I said we was going to show a little bit of weakness today, and we're going to continue up and test 379. And that's exactly what happened today. And once again, after this weakness, this is where we should have been positioning for calls. 1, 2, 3 bars. You know what I say? After 3 bars in one direction, expect a retracement. Here it is again. All right. But it's sitting on top of the level. So it broke it, and now it's sitting on top of it. It's sitting on top of it. So now it's still a momentum divergence, y'all. The parameters are still the same. So now this is the weakness in the strength that we look for. It's another momentum divergence. But at this point in time, let me see, is it overextended? Because that's a parameter we need to look for. Is it overextended on the daily, on the longer term time frame? Overextended, is it outside of the boundary bands? It's playing with it, but it's not outside of it, right? It's not extreme. but it's testing the limits because this is a level, right? I see it breaking through. I see continuation. That's what I see. I see some weakness tomorrow. Actually, let me see if we see it going on already. Yep, look. So here's that weakness for tomorrow, because it's going to come back inside of the boundary bands on this time frame here. It's going to come back in. So I see it coming back into about 377 before it keeps going. And the next level up is 388, y'all. I don't know. We may test that this week. Just like I said, we were going to test 379 today, and the high of today was, what we got here, 379. Listen, we only do what the chart say. The chart said what it said. We have to draw our levels though, and that's the only way we'll know where price is going. I don't have no crystal ball. I'm just reading the chart. Hence, Cheef and chart. Where my weed at? Great gasoline, man. So this is what's going on. This is what we're doing. So if you're playing anything that is in correlation to the SPY, why we look at the SPY is because it's the top 500 companies of the stock of the economy, the stock market in general. So whatever the SPY is doing, 9 times out of 10, a lot of times out of 10, the rest of the market is going to be doing. So when you look at anything that is in the SPY that you may be trading, Nike, Amazon, their charts are going to look similar to this one. So let's give you an example. So you see what this chart looks like, right? And let's look at Amazon. No, actually, Amazon's earning is coming up, so that might not be a good one. So let's look at Nike. I don't have any levels shown here, but let's see how to shrink this. Need some more data in here. Need some more information. All right, so let's see if we can do a little comparison here. I hope y'all understand what I'm saying. So this is going to the upside, and what is Nike doing? Nike is also going to the upside. We have a new high in the MACD in Nike, right? Boom. Last time it went up after a drop, this is where the MACD was. Went up, drop, went up, another high in the MACD, drop, went up, another high in the MACD, drop. So we have a new high, and this is where we should have been doing calls at, right here. This red bar with this new high in the MACD, right? So if you would have got in at 86, 87-ish on Thursday of last week, the next day you could have got out at 88. We held on to the next day, got out at 89. But preferably here, the next level up. But yeah, so next level up here for Nike is $92. We have a new high in the MACD. I will be looking for weakness. And let's see, 2 hour right here, boom. I will be waiting to see how much weakness this is going to give me. And that's where I'll be positioning for calls with this weakness. New high in the MACD. In this weakness, I'm taking this. If I was, this is not financial advice. I'll be waiting for more weakness. Wait for it to stop. Position for the next level up, which would be 88-ish. With the longer term, let's see, where's the longer term level? Longer term level was 92. All right. So depending on what my expiration date is, I'll be positioning for 92, but I'll probably get a strike price in the intermediate level, which would be 90. I'll do a 90 because it has to go to 90 before 92, right? But this is how you do it. You see what the SPY is doing? It's going to give you confidence on your stock. If the SPY is going up, your stock is going to be a lot of times out of 10 going up too. But I just gave y'all a play right quick if y'all was paying attention. It's Cheef and chart, man. It's a recap. What we're doing is we're positioning in the longer term price action when we drop down into our trading time frame. So right now, I believe on this pullback, waiting for some more weakness before we position for the next level up. The next level up would be the next intermediate level up is 381. The next longer term level is 389. It's $9, man. Make sure y'all hit the like, subscribe, and notification bell. If you want to learn how to swing trade like this, feel free to hit the about section, grab the course, pay what you want for it. Always remember, ain't no competition. It's always you versus you. See y'all tomorrow.